Good afternoon and welcome to this session on managing a trade during a trend. Today is Thursday, October 27, 2011. Thank you for joining us today. This is Darrell, your host. In just a moment, we'll be joined by Darrell Jobman, a senior analyst for TraderPlanet.com. The information conveyed in today's presentation is for informational purposes only. It is not a recommendation to buy or sell any trading instrument, and the opinions given by our presenter may change without notice at any time. Please also be aware that trading involves substantial risk of loss and therefore may not be suitable for all investors, and past performance is not indicative of future results. This webinar is being recorded and will be emailed to you, so you will be able to review the material again at your convenience. If you're new to attending Trader Planet webcast, you'll be pleased to know that we have previously recorded sessions on our site at www.TraderPlanet.com. As an interactive event, Darrell will invite your questions at the conclusion of his lecture. Your questions let Darrell know if he's been effective with the discussion and helps as he prepares future presentations, so we hope you'll help him out by sending in some great questions. Simply type your questions within the QA frame in the lower right-hand corner of your screen, and we'll stage the questions for Darrell to answer. As one of our more revered market analysts, Darrell Jobman trades his own personal account and has been involved in the financial markets for over 40 years. A decorated Vietnam War veteran, he was a newspaper farm editor and editor of several agricultural publications before becoming an editor of Futures magazine for more than 15 years. He has written and edited more than a dozen books and courses on trading. Darrell enjoys helping others succeed by teaching the do's and don'ts of trading, so if you're in need of his help, you'll benefit from his editorial contributions on TraderPlanet.com. It's now my pleasure to introduce the senior analyst for TraderPlanet.com and our good friend, Darrell Jobman.
Thank you, Darrell. Thank you for that introduction. And before we actually get into today's presentation on talking about trend trading, we need to make a couple of housekeeping type of announcements. First of all, we'll be using the Vantage Point Intermarket Analysis software charts. When we get to the charts, then you may want to, at that point, put your computer on full screen mode, because we will be talking about some fairly precise points on those charts. Also, we are sponsored by Wassendorf and Associates, which is the publisher, of course, of SFO, has Traders Press, and it offers a whole range. When you combine that with TraderPlanet.com, you have a whole range of information and education available to you to learn more about trading or to improve your trading strategies. Today we're going to talk about trend trading, and I know that there's some people are trend traders and some people trade against the trend, and hopefully a lot of people are looking at the market as trend traders. Tends to be my favorite way of looking at it, but obviously there are not always trends to be able to trade. So when we look at that favorite method of trading, first of all, of course, there has to be a trend, and markets spend a lot of time not in trends, kind of chopping back and forth, trying to confuse everybody. So first you have to have a trend, and you got to identify that trend, and then once you have identified it, you have to trade with that trend until the situation changes. News comes along or something happens to change the perspective. Now we know that we don't want to be too anxious. We can't be too early, because we then can get caught in choppy situations, get in and get out, and then all of a sudden, the market goes our way after we're knocked out. So we do want to look for early alerts. That's one of the things we do want to see in chart patterns, where we see indicator changes or momentum shifts or overbought, oversold conditions, those kinds of things that suggest that conditions could change into a tradable trend. Now, and again, not too early, but we want to make sure that that trend is underway. And then as indicators are building a trending case, we need to have them sort of point the way with clues on a chart, where we have confirmation from various types of indicators to provide clues to clarify the trading decision. Now hopefully that will lead to a favorable entry point. As we mentioned, we like to enter early, and the trend moves in the direction from the beginning. Doesn't always happen, but we have to prepare to act at a given point and not after the fact in hindsight. And sometimes that does mean that you will have to react to the market going against you, causing some early losses. Now after you enter, then you kind of get into that critical stage, early stage of a trend. We want to get through that without getting stopped out. It's kind of like when if you were flying the space shuttle and taking off, you got to get out of that environment of the atmosphere first and get up there. That's the most dangerous part. Then, of course, landing is the other dangerous part. So the entry and the exit are the critical points in the same way with trading. We want to be able to detect a direction. We want to be able to detect that position. And we want to make sure that we are in a position that is going the same, the position that we have is going the same way the market is going, because we don't want to be fighting the market. We don't want to, go against it. Once you get through that early anxiety period, then you need to look for clues whether a trend is building strength. You look at chart patterns, you look at trend lines, indicators. You also want to have the fundamentals going your way if you possibly can. That's all part of it, to build that trend into something that's strong enough to stay on board. At some point, there may be some slight setbacks. You may have congestion areas in there. Sometimes on a typical chart, you will call them flags, pennants, those kinds of things. Maybe that's a clue for a turn, but it can also be another opportunity to add to a trend position when it breaks out of a chart pattern like that flag, or if there's an indicator that signals there's more strength ahead. Now, I have to make a warning here. When you're talking about building a position and adding on to what you start with, too large a position near the end of the trend can really mean big losses if the market turns around suddenly. It's kind of like the reverse pyramid problem. So if you have the means to do so, best to get the most contracts early. Of course, that ideally is not always possible, because that early stage may be a little bit shaky in terms of whether it's going to be a trend or whether it's not. But if you have the ability in your account to get a couple of contracts together, or multiple contracts, try to build from there as a base rather than try to add on with bigger positions later. And then as a trend extends itself, you want to look at how to preserve the profits before they evaporate. Perhaps you want to tighten your stops. You want to look for turning signs from indicators. You want to be cautious at the battle zone areas, as I call them, such as previous highs or lows. When you look at a strong move, there's always going to be some kind of a reaction or a reversion to the mean type of thinking that's going on among traders. You want the trend to extend, but you don't want to overstay your welcome either and let it take some profits away. Then, of course, you don't get the reward unless you exit at a favorable point to capture all that the trend offers without risking a turn that can wipe out those profits. So, question, how much is too much? Well, that will vary to each trader. So you have to consider, again, fundamentals, charts, indicators. It's a constant type of a study that has to take place if you're going to be a trend trader. Now, you might not trade some markets. You probably wouldn't trade silver like you would trade some other markets that are stable. But, when you look at markets and look at for trends, each one of them is going to have their identity, and each one is what you must study to find out where and when to get into a trade. Now, one of the things we kind of talk about a lot in previous webinars that we've talked about is that we really don't know much about what is going to happen with the fundamentals. We can hear forecasts about something that's coming out. We hear announcements. For example, we had the announcement just today that the euro, has some kind of a solution, a temporary solution, maybe. Who knows how long it'll last. But that was enough to spur the markets. It's a case of having to be aware, having to be alert. But at 4 a.m., we probably weren't, at least in the Midwest where I am, we weren't probably paying too much attention to the fundamentals. Even if we knew the fundamental, we don't know how traders are going to react.